Troy, Don from the Defiant Productions podcast, where we're going to be demystifying Bitcoin, cryptocurrency, and making information more accessible for everyone. So thank you for tuning in. We're here to answer any questions, go into crypto, Bitcoin basics, kind of going back to chapter 1 and making it more clear for everyone. We had some great catalysts come up in the last couple of weeks. We can dive into that, but we also just want to dive into some simple stuff that I think would be beneficial for everyone, especially as we're at the tail end of the bear market and, we're at the start of the new bull. So, first things first, share this with a friend, and don't be afraid to ask questions, because this is why we're here. We're probably live right now on your Facebook feed, so this is a great time to tune in.
Yeah, we've been doing this podcast for, I think it's about 14 months now. And I think sometimes when you're doing something week in and week out, and you're progressing in your content, and you're growing, and you're doing it consistently, that you kind of forget that along the way, while your content is growing, that you're picking up new people along the way. So, just because we have progressed in the things that we talk about week to week doesn't mean that our audience all has. So sometimes we might be getting people in that have seen us for the first time. And some of the feedback that I'm getting from some people that do watch our content is like, sometimes we do get a little bit too technical. And I think that for me, at least for me, like my reason for doing this and being here is assisting in the mass adoption of Bitcoin and crypto. In order to do that, you have to be able to speak to the everyday person, to the average person, to the person that doesn't even understand the old system, to even tell them why this new system is important or something they should take a look at. So I think it's really important sometimes that we just like hit the reset button and get right back to, what this is all about, why this even started, what it is, what it does, and answer some of those basic questions. And I thought that today would be a good time to hit that reset button and do that. Really quick, I want to talk about, we did have a guest planned. We were working behind the scenes. If you follow me or Troy on Facebook, you probably saw that we had a guest booked from the BitCon Netflix documentary. We were speaking with the star of that podcast behind the scenes. We did have him coming in. Would have been last Wednesday. Was it last Wednesday?
Or today.
But originally it was going to be last Wednesday, and then that storm hit and basically shut the airport down, crippled the area because we were flying him in. So we had to pivot on that. And we were going to do today. And then, sometimes these things do happen when you're negotiating things behind the scenes. And, for reasons out of our control, it fell through for today. So we don't have him on today. We're still going to work to see if we can work something out. Even if we can't have him in studio, if we can do something maybe via Zoom. Still working on that, as well as other guests that we're also... I really do like the guest format. I really like interviewing people. I like sitting back because I do talk a lot, and I just like giving other people a chance to talk for a little bit.
Yeah, so feel free to reach out to us if you want to be a guest on this. Nothing's holding you back. Just reach out to Don or I, and we can make it happen. Especially if we want a skeptic, we want someone that really just looks at this, correct, that doesn't want anything to do with Bitcoin. We have the Bitcoin ETFs now, so that solidifies this as a legitimate asset class, which is great. I do want to dive a little bit into some of the pros and cons of the Bitcoin ETF. We've had a bunch of outflows from GBTC, which is Grayscale Trust, which is a ETF, which is causing a lot of the selling pressure into the Bitcoin price action, but a lot of inflows into other ETF issuers like BlackRock, Fidelity, or Charles Schwab, and Kathy Wood's ARK. So that is good. That is positive.
Good moment to peel it back a little bit too, because some of our viewers that are seeing this, and I know this from speaking finance to people, they may not even know what an ETF is or what it does. So let's peel that back real quick. Let's rewind back to something everybody understands: stocks, right? Everybody knows stock market. Everybody knows like Apple. If you own a share of Apple, you own a small piece of the company. Or if you own Netflix or Amazon or any of those companies, some of you may have those in your 401k. Some of you may have that in your Robinhood account or your Charles Schwab account, or depending on what kind of investor you are and what you do. when you own one piece of a company, all of the returns of that one individual company basically will the performance of that will reflect in your portfolio. So if you own Apple stock, right, and you really like the company and you own a lot of shares of it, it's been very good stock to own. But the downside of that is if tomorrow we find out that the CEO molested some 5-year-old kid, the company's great. iPhones are great, right? There's nothing fundamentally wrong with the company, but that news will tank your stock price. And if you're overly exposed to that one stock, it will have a detrimental effect to your portfolio. So you may like Apple, you may like tech, you might be a tech guy. So what they created years ago, probably a decade, more than maybe 2 decades ago, I think they started creating them, was an exchange traded fund. And in that exchange traded fund, you have the ability to get access to a sector of stocks. So if you like Apple and you like tech, you can get a tech sector ETF, which may have Apple in it. It may have Microsoft. It may have Facebook. It may have a bunch of those. Yeah, it may have a bunch of those stocks. And Apple might only make up 11 or 12% of that portfolio. So God forbid that scenario occurs, you're not going to be affected detrimentally in your portfolio because you have the tech sector, and the tech sector is tied traditionally to the NASDAQ, and the NASDAQ is, I think, at an all-time high again. And as the NASDAQ performs, your portfolio performs. You don't have to worry about those types of events.
Like QQQ is a perfect example. I've actually started trading options. Well, I've been trading options since 2019, but I took a little bit of break because I wanted to focus on, DeFi and crypto, especially the opportunity that's presenting itself. And QQQ is something I use as a benchmark when I do trade the stocks or the tech companies within that ETF. So QQQ is a perfect example of an ETF. Same with SPY. That's the S&P 500 ETF. So that's, like you said, a great way to mitigate risk for those events that could potentially happen.
So this brings us to the Bitcoin ETF. So for traditional investors, the high net worth guys, right? The boomer generation, what you will there. They are not necessarily comfortable going on Coinbase or Gemini or even doing self-custody. All the stuff that comes along with the space, a lot of the higher technical stuff that we talk about a lot, they're just not, either they don't have the time to invest to learn it, or they're just not interested in doing it and they'd rather have somebody else take care of it for them. And crypto and Bitcoin is basically a be your own bank type of venture. So when you're buying Bitcoin, you're buying crypto, it's you're taking control back from the bank. So it's like you're the one that's in control. And some of these people just don't like that. Yeah. So the ETF has been created to allow them to have a custodial like BlackRock, Fidelity, Vanguard, or one of the other 9 or 10 custodials kind of handle that for them. And it makes them both get exposure and takes the risk off the table of loss that would be there if they were doing it on their own. So that's kind of what the exchange traded fund has created for the big net worth investor. And the good news is it's not just them that can own the ETF. We can also, as retail investors, also own that ETF and do the same thing. So if you're watching this and you've seen us talk about self-custody or buying on Coinbase or Gemini, and all that just seems too overwhelming or technical or just seems like a lot. Like you can go on, I believe, I don't know because I haven't looked, so I don't want to give information, but like I don't know if it's on Robinhood yet. Like if Robinhood has the ETFs.
I know it's on Charles
Schwab, Fidelity for sure, because I have my old 401k through Fidelity and I have the app and I can see that it's obviously trading on there and you can get a piece of it. And it's a great way to own a piece of this ecosystem. And I have my own feelings on this, but it's probably a reality that we're going to get other ETFs of other coins, most notably probably Ethereum. So it won't just be Bitcoin that you can own these types of products with. It's probably going to be some of your favorite altcoins eventually as well.
Keep in mind that there is a small fee too when you have these issuers, but there's less responsibility. Like there's great responsibility for being a self-sovereign crypto holder. You have your 12-word private keys, going back to the basics, and you can store that wherever you feel comfortable, and you have full ownership over these assets. Like you can do trading, you can do borrowing and lending, you can do other things in DeFi, which is decentralized finance, that you couldn't do if you were holding that ETF. You have that on your exchange. You can't send it to someone. You'd have to, you know what I mean? Like I'm sure you can actually. Let me go back. You can send it, but it takes a few days for the funds to settle, as opposed to if you have the Bitcoin, it takes whenever the blocks, whenever
10-minute blocks.
yeah.
Yeah. 10-minute blocks, 6 confirmations. So let's go back to 2008, October of 2008. That's when the original white paper by Satoshi Nakamoto was released. It was released on a cypherpunk newsletter, and released into the ecosystem, and Bitcoin was kind of born. So, to really truly appreciate why Bitcoin was created, I think you have to really understand what happened in 2008. We talk about it sometimes, but maybe this is a good time to go back a little bit and talk about how it was the catalyst for this whole thing that we're doing now, this whole podcast, really our lives that we've dedicated to this space. The banks in 2008. We're going to give you the condensed version because we don't have all the we could talk about that. There's been documentaries that are hours long that have been made about the Great Financial Crisis, so I'm going to condense it a little bit. In 2008, in a true free market, banks would have failed, global economy would have failed, and we would have had a reset. In a true market, true free market, that would have occurred. We think we have a free market. They sell us on the idea that the market is free, but we found out in 2008, for those of us that pay attention, it's truly not, right? Because the government came in and saved, after Lehman Brothers collapsed, saved the big four, the big five, the Bank of Americas, the JP Morgans. They saved these banks from failing. And there are pros of doing that and cons of doing that. Obviously, banks collapsing and the economy collapsing is bad for everybody, and that's catastrophic for people that are trying to eventually retire at some point. So I see why they did it, and it would have been good that they did it if their actions that followed would have been in the realm of fixing what led to the problem. Unfortunately, what happened was they saved the banks, they stopped the global economic collapse. And once they realized that it was saved, it was business as usual, and they went right back to doing the same thing that they were doing before. So now what we have is an environment that's actually worse than it was before 2008. To really wrap your head around that. As bad as the the GFC that we always refer to, and you'll hear like economists and people refer to that 2007, 2008, and the housing market collapse as this great event that occurred. But the reality is, if you peel back and take a look at our economy right now, things are much worse behind the scenes than they were before 2008. Satoshi, being the visionary that he was, saw what was happening and what was most likely inevitably going to happen. And he decided to create an alternative to that system to give people a chance to opt out. Okay. And I'm not going to get super technical and explain exactly how that works because we could be here forever. And for some people, that's just going to go over their head. So I'm just trying to give really basic concepts. Bitcoin was birthed from the Great Financial Crisis because a very smart individual or individuals, depending on what you believe, if Satoshi was a person, a man, female, or a group of an entity of people, saw what the government was doing to bail the banks out, and realized that, yes, they're saving us from a collapse, but they're not going to stop doing what they're doing, and we need an alternative. And he created that alternative. The problem that continues to persist is that the money printer turned on in 2008 and hasn't turned off since. And if any of you have any addiction in your family, and again, I have a background of being an addiction counselor, so I'll make this relationship here. An addict, when they get addicted to their substance of choice, they keep doing it not because they want to, but because they have to. That's addiction, right? You're not doing it because you want your life to be screwed up and things to be a mess. You've passed the point of I'm doing this because I want to, and you've now entered the realm of doing this because I have to. Let's use a heroin addict because everybody can identify, and we're, the whole border crisis stuff going on with the fentanyl. When you're injecting heroin into your body, that heroin is needed just for you to feel normal. If you don't, you get sick. The money printer is the heroin for our economy. If you take the money printer away, the economy gets very sick. So you have to keep printing in order for the economy not to get sick. So you're trying to avoid that sickness while not realizing how absolutely sick you are as an addict. And you can't see it. Other people can see it, and other people will point it out, but you as the addict are just looking for your next fix, and you're just so laser focused on getting that next fix that you can't see how big of a problem that's been created. That's our economy, and that's basically what's happening, and that's why Bitcoin is created, and that's why, you'll hear me and others say, like, if not Bitcoin, then what? And it's hard for people to like picture this like fake internet money that they'll talk about, or this money in the internet money, or something you can't touch, or how does this thing like go from pennies to 69,000, and they don't understand all the technicalities. And it's like, do you really understand all the technicalities of the economy? Do you know why the great financial crisis occurred? Do you understand what happened in 2008 or what's happening now? The answers to all those questions for an overwhelming majority of the population is probably no. They go to the bank, they use their bank card, they get their paycheck, and they just engage in the economy. And they don't understand what's really happening. And they feel when they go to the grocery store, or when they're making a purchase of something and they see the price continuing to go up, they don't quite totally understand it, but they know something's not right. And Satoshi saw all this, created this alternative, and that's what it is. It's an alternative to the system that we're engaged in, to give an everyday person an opportunity to survive the inevitable crash and collapse of what we know is our modern economy.
And COVID accelerated that. What was it? 80-90% of all the money supply was printed?
No, it was 40% of the entire amount of dollars created since the beginning of dollar creation was created in an 18-month span. It's 40%.
Yeah.
So it was inevitable that we were going to see the type of inflation that we saw. And let's talk about that for a second, because I think everybody can understand this, right? I want you to just think about inflation as a thought experiment. Your government has made it acceptable to take what they say is 2% of your buying power away from you on an annual basis, right? And nobody pushes back on that. When I say nobody, I mean the overwhelming majority of the population, because we just accept it, because we've done nothing to try to change it. So your government every single year is aiming to take 2% of your buying power away. Now they aim for that, but because they've screwed this thing up so bad that it's been much higher than that. During COVID, it was double digits. But let's just go back to the 2%. If you make $100,000 a year, right? Over the course of a decade, they're taking over 10%, if not more, of that buying power of that money away from you. Just because. There's no really good explanation that I've heard that has made me say, oh yeah, that makes sense. The explanation that you typically get from an economist is that they use that inflation to motivate you not to just keep your money in the bank, but to keep the economy going by spending year in, year out. So they don't want you to just let that money sit in the bank. They want you to use that money and keep the economy flowing by spending. I think it's pretty safe right now, the way that our economy is set up, that people don't need inflation to be motivated to spend, because people just spend anyways. So I think that argument isn't even any good anymore. I think it's just a terrible argument. So they shoot for 2. We got up to what they told us was 9.8, I think. We were really close to 10 from what they were telling us. And again, the CPI that was used in 1975 is not the same CPI that's used today. If we use the same CPI from the 70s and 80s when we had our last like real inflation crisis, the numbers are like 15-16% that we were experiencing. And I think some of you that are watching this or will watch this can identify with some of your things going up that much in that short amount of period of time. But now we're somewhere in the range of 3 to 4%. So that 10% that you lose in a decade right now at the pace that we're going here, about 3 years, you lose your 10%. So it's like, now when you start to realize like what inflation is taking away from your buying power, your investment strategy has to change. Traditionally, you're looking for 7 to 8% in the markets, right? So if you're looking for 7 to 8% in the markets, and you're getting that, if they're taking away another 3 or 4, what is your real rate of return? 3 or 4%. So you're actually not getting the type of returns that you think that you're getting. Or when your boss gives you a raise and tells you, hey, we're going to add 2, 3, 4, 5, 6% to your salary. If you don't know what the inflation is, you're not even going to know if you're really getting a raise or not. For a majority of the population, from 2020 to 2022, everybody was getting money taken away from them every year. If you got a cost of living raise of 3%, you were losing out by 6 or 7%. You were getting a 6 or 7% reduction in pay every single year. And that's why when people were making these TikTok videos, going to the store, putting stuff on the table and saying, look, this is what $100 buys now. It's like, that's where it's at. That you're seeing it. That's where you're seeing it. When you're going out and purchasing things, that's what you're seeing. And that, to tie it all back together, started in 2008. When the government made it okay to bail out banks. The bank said, we have a free pass to do whatever we want. I want you to think about it like this. Let's say you go to the casino tonight. You take $1,000 with you to go gamble at the casino. And before you walk into the casino tells you, we're going to let you gamble tonight that $1,000. And guess what? If you lose your $1,000, you get it back when you walk out the door. But if you win, you get to keep whatever you win. Would you not go to the casino every single day with $1,000 if that was the allowance for you? If you could walk in there with $1,000 and gamble and take all the risk that you want, bet the absolute worst games, like no, who cares what the odds are? I'm betting all the 40 to 1s, the 50. I'm playing the worst possible games in that casino where the odds are the highest, right? I'm not playing blackjack. I'm not playing any of those like 50-50 games. I'm not playing red and white on the roulette or red and black on the roulette wheel. I'm going to play the terrible casino circus games because it's irrelevant. If I lose, I go back tomorrow with my same $1,000 and try to win again. That's the banks. That's what the banks have been allowed to do. That's what they've been allowed to do since 2008, and they continue to do so. They take your deposits that you put into the bank, and they play casino circus games with those. And if they lose, they get made whole, and if they win, they keep the profits. That's why Bitcoin was created.
Wow. That was a really great explanation. I like the analogies you used. But yeah, and that's where we go back to the basics of like, you have to understand the system you're engaged in to even, have that look into Bitcoin. So that's why it's good and helpful that we're diving into inflation and stuff. I personally, I think that, I can't even imagine a world without Bitcoin. I'm a little bit younger, so I've experienced this at when I first 2017. I was about 20, younger 20s. Now, what about like the boomers that come in and they went their whole life so engaged in this traditional system, and they're so immune to the inflation, and then this new asset class comes along, and they're in their late 40s and 50s, and it's kind of hard to adapt to, it's to this new system that we're engaged in, which eventually will be, everything's going to be tokenized, Bitcoin, Ethereum, like we have the ETFs coming. Like, do you think that like it's like the people that made their wealth in the traditional system, and then they have this new alternative system, and they're skeptical of it because they're so used to this 8% inflation or 2% inflation, or they're addicted to like that old system that's being replaced. Does that make sense?
It does, and I've been having a lot of thoughts lately about where we really are in this whole adoption curve, and if maybe because of the fact that we have so many influencers in the space, like spitting out like, and we're guilty of this too, and I want to in the future, I want to try to peel back a little bit of like price predictions and stuff like that, because I just think like, look at the price. Look at what we did before the ETF, talking about like Bitcoin's going to do what it's going to do. Nobody knows what it's going to do.
Yeah.
In the short term, nobody knows. We're all pretty confident what's going to happen in the long term, but even that, like, who knows what it'll look like 2030, 2040, or 2026, 2027. We're guessing. Like we're looking at what happened before and trying to extrapolate that on a chart. So the point of that is like the example that I'll go back to, because it's just we can't predict the future, but we can look back at the past and use the past as a place to like start to try to like figure out what's going to happen in the future. If you look at gold, they confiscated gold in 1933.
Yeah.
Right? So as early as 1933, they already recognized gold being some sort of threat to the system that they were starting to create with the Federal Reserve and this path that we were moving towards. So they confiscated gold in 33, and then it took another almost 40 years before we actually got off the gold standard. So 1933 to 1971 before we actually got off the gold standard and just went printing crazy, right? And didn't have our money back by gold. Now, technology makes things happen faster. I recognize that and I acknowledge that. But the more I really like think about things and just see like where we're at on the adoption curve, you know, it's possible that we are like the sacrificial lambs for this revolution. And I've said this before, like I'm holding my Bitcoin until I die and it's for my kids. But it's like, because I think a part of me recognized like it's not going as fast as we would like it to go. Like the mass adoption isn't happening as quickly as we would like it to go. And maybe we need that boomer generation to age out.
Yeah.
I mean, not be as prevalent of part of the population. And then your generation, like the millennial generation, to make up the majority for this thing to really start to take footing. Because the unfortunate, not, I don't want to say unfortunate, but just the reality is that like the money is concentrated in, like the majority of the wealth is in, you know, the 50, 55 plus demographic. And they're just not,
They're not budging.
they're not buying into the idea of pivoting from what they thought for 30 or 40 years of their working life and of the wealth creation that they got, to say, oh, well, that system wasn't really great and it's corrupt, and let's like opt out into this new thing and take this risk that, you know, some guy with a Cleveland Indians hat on a podcast is telling me that I should, like, I understand that, like I get it. So what's been troubling to me is just to watch like these influencers now because we do this, like, and I'm spending so much energy and we're spending so much energy trying to create this brand and this content, and I watch others even more intently to see what they're doing, and it's like there's a lot of disingenuous actors, and I don't even know necessarily that they're conscious of the fact that they're disingenuous, but it's just like they're feeding the audience bullshit that I don't think does us all any good. Because now you have these people that come into the space that are our ideal demographic, right? The ones that are super new, they're wet behind the ears, they need to be educated, they need to understand like we have to answer the why questions for them, right? Why Bitcoin? What is Bitcoin? We have to keep it super basic. And then they come in and we tell them about Pepe Coin, and we tell them about like Shiba Inu, or we tell them that, you know, oh, Bitcoin might hit 500,000 before the halving, or like this cycle could get to $1 million, and it's like, what the fuck are we talking about?
I just saw on Twitter you got a lot of engagement on it, but you were coming at someone for doing some crazy prediction. Do you know what I'm talking about? Was it a meme coin? It was some like that. That's like the worst way to onboard.
Well, I will speak on one thing. I'm not quite sure because I tweet a lot what that one is, but I do want to talk about one, and I actually like their content, so I'm not. And they're like one of the biggest ones in the space, and I think they do pretty good at staying out of drama. Altcoin Daily, but they tweeted something that I thought was disingenuous, and they tweeted about Bitcoin being deflationary and inflationary, and then Ethereum, because it burns coins, is really more deflationary than Bitcoin. And I just thought that was a completely retweeted it and responded, and I just said like, that's a completely disingenuous tweet, because somebody that's coming into the space for the first time and sees that is going to think to themselves, oh, I thought Bitcoin was the scarcest asset and it only had 21 million. Well, this Ethereum thing is actually better and it's scarcer. And it's like, no, just because you're burning coins, there's still way more Ethereum coins
120 million.
than there are of Bitcoin. And Bitcoin has a set mining schedule of releasing coins. All the Ethereum coins are basically, it's proof of stake. They're not mining. They don't even mine. It's not proof of work anymore. There's no mining going on, right?
There's validators.
So you're not even. It's not even the same protocol to be comparing it to. You're better off comparing it to like Litecoin or Monero or one of these other coins that still mine, right? So it's just like, and again, I don't necessarily know that they meant to be disingenuous. They're just engagement farming, and they're just like trying to get people to react and respond. But like when you see that, somebody like me that's trying to like educate people and really try to get people to understand genuinely, right? Try to get people to understand why they should take a look at this asset class. And then you have like some of the biggest influencers in the space just tweeting out garbage like that and getting like thousands of retweets and likes and a million impressions. And I'm just like, man, like what are we doing? Like how is that doing anything positive to onboard anybody?
Yeah. I agree. And I remember when we first started this podcast, we had this little debate about how I thought meme coins are a great way to onboard people, because then, you know, they have these dog pictures. They're starting to, you know, even if they lose a little bit of money, they're going to learn.
We did a whole episode on it. Yeah.
And the more, you know, we talk about it, it's like, go back to the basics. Bitcoin, Ethereum. That's it. Just don't less is more, you know, keep it simple, learn the basics of that. Well, first learn the basics of the economy and inflation, stuff like that. But yeah, I think that's a terrible way to onboard, because it's just going to give you a bad taste for crypto, and that's not what crypto is about. It is volatile, but buying, you know, Punk or Bonk, or there's so many different meme coins, it's disgusting. Don't
now that I'm fully in finance,
Yeah.
now that my day job is actually in finance as well, my thesis on investing is even more solidified than it was before. Like when I was on the outside looking and just this being a hobby. Now that this is like my job in my life, I'm really leaning into like, we are lying to people, not me and you, but like as a investing in money ecosystem, like there's so many lies about investing that are being sold by people with large followings and that are content creators. And we fall victim to it. You cannot, and I'm going to say this because it's just an overwhelming fact. If you want to lose money, be a trader. If you want to lose money, be a trader. Because unless the criteria to be a successful trader, number one, starts with this: you don't have any other job but that. If you don't have 50 or 60 hours of your week to dedicate to study time, not trading, not the trading part, 50 or 60 hours for study time, another 10 to 12 to actually initiate the trades, you're not going to win.
We're too emotional. People, human beings, are way too emotional to be traders. That's why they say like 90% of traders fail. So
no,
especially
no, it's 90,
higher?
99.
Really?
99%.
I heard it was 90.
99%.
Depends on what source.
Well, your Facebook feed is going to tell you that like Joe Jerkoff, you know, made $20,000 on some trade that he made, and he feels like he's a god trader now.
Show me your losses.
It's not even that. Maybe that's the only trade that he made, and he just hit on it, which is great. But like, to think that you're going to turn that into like a 6-figure a year income, or to make that your job, and you're working at like Walmart, or you're an electrician, or I'm not talking shit about those fields per se, but if your day job where you get the majority of your income is something else, you can't trade successfully. And that's Bitcoin trader, that's Ethereum trader, that's crypto trader, that's trading.
Options.
Period.
Stocks,
You can't make money trading.
Yeah.
And the ones that do are elite. Blue collar dangerous on Twitter. That's the dude. Those are the elite dudes. Those are the dudes that dude like lives, breathes. Like he's talked about like 32-hour benders of just like not even realizing that much time has passed, and he's like entrenched in like study time and trading, and he just snaps out of it and he's like, oh, I just made 78 grand, but like where did the last 2 days go?
Yeah.
That's the mindset that you need. You can't do it.
Right.
You can't do it.
If you're a Robinhood trader that's spending a couple hours a day, like that's not enough, you know. And if you're using Robinhood, like, there's a lot more elite softwares you can use. There's definitely money to be made in trading, but if you are going to be a trader, you have to identify that before you actually like pull the trigger. Because I know people who get caught up and they will turn a long-term trade into a short-term trade, or a short-term trade into a long-term trade. You have to like identify yourself before you actually, you know, get into this industry. So because I do a little bit of trading, but I'm trading options and stocks, and it's a completely separate portfolio from my crypto portfolio. So I'm not, you know, using the same account.
But how many hours are you spending doing all that?
Within the 7 years.
No, I'm saying in the typical week. Typical week, how much time are you spending?
4 hours a day.
Yeah, I mean that's that. Yeah.
But I'm only trading 30 to an hour a day, you know. But it, again, like this is something that you have to identify, and you have to. It's all about your position size too. Like if you're trading $10,000, like there's a lot of rules in place you have to have, you know, to mitigate risk, because trading you can lose much faster. When you realize those losses, it's gonna hurt. So you have to have stop losses in place. Like we can get systematic and technical, but we'll keep it simple. Just make sure that you like identify yourself like as a trader. Like look in the mirror and be like, I'm a trader. Or if you want to be a long-term investor, you can't, you know, intertwine that, because that's where you'll get, you know, really caught up in some nasty moves.
And it comes right back to like what I'm talking about, of like these cycles that we experience, these 4-year cycles. Mm-hmm. People come in to the space looking to make quick money,
but they don't even realize what part of the cycle we're in, you know. So
they look to make quick money. Their time preference is so short. So it's one of two things happen. They buy at the wrong time, and they never see the top.
Yeah.
Or they ride it over the top.
Yeah.
And they end up riding down all the profits that they make, and then they get frustrated. Mm-hmm. So why I'm such a strong proponent of just like staying away from everything but Bitcoin is because Bitcoin is going to have its runs, right? It's going to have its runs, but it's one of the very few assets in the entire space that is you know what it's typically going to do and around when it's going to do, and you can just hold on and just hold that asset. And like Ethereum to a smaller extent has kind of like played that as well, but even this bear market cycle, though, it hasn't held the way that Bitcoin has held, or reperformed the way Bitcoin has reperformed. And then you have a lot of other like tokens that might be top 100 coins that have just not done anything.
Yeah, they
really haven't done much.
Yeah,
so like trying to predict like what's going to happen, and when you come in here and you buy these coins, like the $1 million stories exist, but so do lottery ticket winners, right? Like it's not going to be you. You're just not. It's not you. Like it's most likely not you. Yeah, you can go to 7-Eleven today and you can go buy a Mega Millions ticket and you can win. Sure, you're 1 in 278 million chance to win. The same thing is when you come into crypto and you buy shitcoin X, and can you become a millionaire off that coin? Sure. Are you going to spend $1,000 in some crappy ass coin when you don't really have money like that? When 99 times out of 100, your 1,000 is probably going to go to $50. Do you want to take that risk for the chance to make that million?
What people don't realize is if you're putting $1,000 in a meme coin, and let's say it does go to $1 million. Well, let's say it goes up to 200 before that $1 million. That's coming right back down to 50,000. Like the price swings are going to be so big. Like you have to be completely detached from your position, and the chances of that even happening are slim to none. You're better off.
There's also the risk, which is probably the worst thing that you could even happen, is for you to watch your coin 100x, and then realize there's no liquidity for you to cash it out.
Yeah.
So you're looking at a portfolio that just 100x, and your $1,000 is now 100,000, and you try to sell, and there's no liquidity for you to sell. You can't sell it, and then it just dies.
Yeah. That's why, like, if you are coming in this cycle, and people ask me all the time, like, what do I buy? What do I just like learn like the game, like learn the 4 year cycle because it is predictable. Like, if you're buying Bitcoin and you're buying it and you're planning on selling a week later, you're gonna probably lose money. You have to play that 4 year cycle and know what part of the cycle we're in. There's different stock to flow models. Plan B, that guy's good, but there's different frameworks you can use to know when to buy and sell. But a simple strategy we preach this all the time is just dollar cost average. Or put a little bit more money in when we have super big red days, but still have that long term 4 year cycle horizon on your radar.
I think I can't believe I'm going to say this because it kind of goes against what some of the things I've already said, but I think I really don't think somebody should buy any significant amount of Bitcoin
Whoa, he just said that.
until
Yeah, I was just saying, there's got to be more to that sentence, right?
Yeah.
until they've got the mindset that they could never sell it. They're buying it to never sell it.
Yeah.
Not saying that they won't ever sell it,
Mm-hmm.
but I wouldn't come in here with significant money. Like, I'm not talking about the guy buying 50 or $100 dollar cost averaging. Like, that's not the guy I'm talking about.
Mm-hmm.
I'm talking about the guy coming in and saying, all right, I'm going to allocate a 10% plus part of my net worth portfolio, whatever you want to say, which would be significant. I'm coming in with 10% plus, 10, 20, 25, 50%, whatever. You're making a big risk of your portfolio. I would never tell anybody to do that unless you're coming in with the mindset that I'm not selling this. I'm buying it not to sell. If you're coming in with I'm buying this and trying to flip it, or I'm buying this, I'm going to hold it for a year, sell it in 6 months, play the cycles, you're going to get crushed because the emotion is going to be tied to it. Mm-hmm. You're going to make the wrong decision, and you're never going to make the right move. And the odds of you being in a better position than you were before, because we've seen, and it happens, the 75% drops in this ecosystem. And if you make that investment at the wrong time, and you watch your 10% or 25% allocation lose 75% of its value and not have the conviction and understanding from the time spent that anybody that's ever in this entire 15-year experiment held for 4 years, they're all in profit. Every single one of them is in profit from the first year they got in, no matter if it was at the 69,000 top or if it was at the days where it was a penny. Like, if you hold for 4 years, the price comes back and you're in profit. But if you don't understand that and you're making that big investment, you're going to get caught up in the emotions of those moves and you're going to lose. Those guys, stay away.
Yeah. I am, and that's funny you say that. I feel like I'm completely detached. Like, I'm a little bit more attached to my altcoins because they're more like fundamental narrative plays, a little bit short-term time horizon. But even Ethereum, but as far as my Bitcoin, like, that's never going to be sold. And don't you feel that detachment between you and your Bitcoin? Like, whatever happens in price action, you know the value in it. You read the white paper, you have the conviction. So these moves aren't really going to phase you. And there's the law of diminishing returns. So every cycle, there's a loss of a sell-off. So what was it, like 90, 80, 70 on the downside, and even on the upside, the gains are smaller. So I believe that this cycle the gains aren't going to be as significant as obviously the last because of the law of diminishing returns, but it's exciting to see like these patterns play out and how predictable this cycle is and how, and I wouldn't say easy, but I can't predict like an ETF like a QQQ. I can't predict the NASDAQ. Like, that's based off like the money supply and like interest rates and stuff like that. So you can kind of predict it, but I feel like this 4-year halving event cycle, we have the ETFs. I feel like this is one of the easiest trades in the finance game. What do you think? Do you think it's pretty easy compared to these stock ETFs?
Well, it's the antithesis of everything that the fiat system is tied to. Mm-hmm. It's going in the opposite direction of everything else priced in dollars. So, yeah, it's a layup. It's a layup trade. Like, it's just when you understand, and I always say this, and it's like, if you really want to understand Bitcoin, you have to understand the traditional system first, because you can't answer the why Bitcoin question unless you know what the why is. Yeah. So you can't come in here and like look for information about Bitcoin first, it's just not. And again, there's a lot of disingenuous people in the space who are going to Bitcoin, explaining Bitcoin and all that, and the money to be made, and it's like you even see these like I have to mute the guys that are talking about when to take Bitcoin profits. Because you're following Bitcoin influencers that are tied to the fiat mindset.
I think we both have one in mind.
Yeah,
a few in mind.
Yeah.
We'll not bring her up.
There's a couple. There's just a couple.
Yeah. Like, are you trading? Like, you have this mind. Like, I'm not like, this mindset of like, I'm investing, but I'm gonna trade, and just like, no, like, you're confusing people. Like, just hold. And then if you do trade, like,
I just really want people to learn first. I just want people to understand like what it's. I can't get you to my place of Bitcoin, right? People look at me and they talk to me and they just like, they don't get it.
Yeah.
And I understand why they don't get it, because they don't understand what they're engaging in every day. They don't understand the system of fiat and why it's so corrupted and why it's destined to fail. And they don't understand that everything you're buying will continue to cost more and more and more and more and more. There's a reason why, 50 years ago, a $30,000 salary was like balling, and today you can't get by on that.
Yeah.
Like, it's not because everything is like so much greater. It's like we talked about this in a previous podcast. Like, technology actually should make things cheaper because things are more efficient. You know what I mean? Like, things are so inconvenient back then that sometimes you paid for the convenience, and now the convenience is like, it's everything is just easier. So things should cost less because the efficiency has just been exponentially better. Yet it costs more, and it's because the money is worth less. Look at a chart of the dollar from 1913. I meant to tell you this too. The Creature from Jekyll Island. You ever read that book?
The what?
600-page book, The Creature from Jekyll Island.
No.
So Robert Breedlove, who's one of my favorite podcasters in the Bitcoin space, he did the Michael Saylor series. He's got like 9 videos with Michael Saylor talking about Bitcoin. A lot of great clips we've gotten from Breedlove's podcast. He always talks about The Creature from Jekyll Island. It's a book about the creation of the Federal Reserve. And the Federal Reserve, for those of you that don't know, the quick synopsis, and this is just how corrupt this shit is. This is brings it all back to understanding the system. The current iteration of the Federal Reserve was created by 6 bankers who secretly met on Jekyll Island. The top 6 richest bankers in the world in 1913 met on Jekyll Island to figure out how to centralize the money system so they could all call the shots. I'm not doing it justice, but so I'm not a book reader. I can't sit down and read a book, dude. I just can't do it. I haven't been able to do it since high school. I just can't read books. I'm not motivated to read books. I got to watch a podcast. I got to watch a documentary. Can't read books. And I was watching Breedlove's podcast this week, and he talked about being able to go on YouTube and having the audio version read to you. I'm halfway through it, dude. It's amazing. It's just like this soothing voice is reading the book to you as it's like in 50-minute increments of like YouTube videos. When you understand how it all started and you see where we're at now, like, then you know why Bitcoin. Because 1913, those corrupt dudes, like, it's only gotten more corrupt because they're smarter, they're more sophisticated than they were in 1913. And those dudes were worth millions of dollars. These dudes are worth hundreds of millions and billions. The real shot callers. Not, we sit here and we argue over Joe Biden and Donald Trump, and I talk about this all the time, dude. You'll never catch me in a voting booth. Never catch me in a voting booth, ever. It's an irrelevant. And this will make people mad, and I understand because people are they buy into the corrupt system. But like, no matter what you think of either of the candidates, they're not pulling the strings. You think that Donald Trump is going to come in and fix things, and yes, his policies are way better than Joe Biden's. I'll say that. Biden is just eating his ice cream and he's off on an island, so he'll come in with better policies. But he's not pulling the shots. He's not pulling the strings. He's not pulling the strings. There's people behind the scenes that are donating money to both sides and pushing out propaganda to divide us. The same people behind the scenes giving money to the Democrat Party are the same people that are giving money. And we're seeing it if you're paying attention. Like Nikki Haley's donors. are some of the same people that are on the other side, donating on the other side. Why do you think that is? Do you think those guys vote?
No.
I don't want to go political because we're gonna lose viewers by doing that, and it's gonna piss people off. But like, I vote with my dollars. That's how I vote. Where I allocate my personal finance, because I can't control any of the other stuff that's going on politically. Like dedicating energy to getting mad about politics is wasteful to me. I'll shit post and I'll talk junk about it. But like whatever happens in November, a smart investor, and this is the last gem that I'm going to drop on people for the day. A smart investor will take the energy and emotion that they're going to have in November, whether their side wins or their side loses, take a deep breath and use that for their personal economy. I'm going to look and see which party's in power and see how the rules of the game change and adapt to those new rules. I'm not going to spend time crying about it. I'm not going to spend time yelling about it. I'm not going to spend time donating money to these. No. Whoever wins. However I feel about whatever their policies are. And my new job as a head of household and as an investor is to figure out how the rules are going to change and adapt to it. Because this is all a game. The whole system of finance is a game. And if you don't understand it's a game, you're getting played. We all played Monopoly when we were a kid, right? It's one big game of Monopoly. When you understand the rules of Monopoly, you can beast that game, right? That's what this is. You're playing a game. And you're getting played when you're spending 8 hours a day posting about the Democrats because you're a MAGA, or if you're a progressive and you're posting about MAGA, and you get all caught up in that nonsense, and what is it doing for your bank account? What is it doing for your financial position? You're wasting time. Tell me the rules, and I'm going to adapt. That's what you do. That's your job. Your 2024 job is to find out what the rules are going to be in November and adapt. Don't complain because you can't change it. You're just one person. These dudes are so powerful behind the scenes, you're not changing it. No matter how you feel, and especially in a state like New York, it doesn't matter who the Democratic nominee is. They win the state. So what am I getting upset for? Or what am I happy about? I didn't do anything. If I'm a Democrat, we already know who's winning the state. If I'm a Republican, I already know who's winning the state. Why am I wasting any energy on that? Tell me the rules. Give me the rule sheet. Let's go play, right? If I'm playing football, I'm not coming with a baseball bat, right? If I'm playing soccer, I'm not bringing American football. Tell me the rules. Let's play that's the time to play. That's when you put your head down and you grind. You don't complain. That's a bitch move. That's a bitch move to sit there, complain, and blame some asshole that doesn't give two shits about me and say he's the problem. I'm the problem. I got to look in the mirror. What are the rules of the game? Give me the rule sheet. Let's go.
Woo! Don spitting gems. That was good. Got my blood boiling. Wow. I think we should just end it off there. Like I said, guys, feel free to reach out to us if you guys want to come on, be our biggest skeptic, ask questions.
Or new people. Even if you don't necessarily have to be a skeptic. You can just not understand anything about Bitcoin. We can try to have a conversation.
Yeah.
And that would be good for the viewer, I think, because we're so entrenched in this. It's really hard to go all the way back to like before I knew anything to know exactly what questions need to be answered. Like I tried today to like take it all the way back, but I know I didn't do it justice. I know there's people that may watch this or people.
I think you did actually. Like as you know, I'm just a guy over here. And I'm in my 50s, and there were so many things today. You guys said stuff like why is my generation? I'm only slightly older than you, maybe a lot older, but thinking about like why don't I want to jump in? And I think part of it for something like my generation is I've got this stuff that I have, and I don't want to fucking mess with it. You know what I mean? Like I was in 2008, I lost half of my portfolio that I've been investing in through my 403b and everybody's like, oh, don't worry about it. By the time you retire, I'll be back. But the meantime, I'm watching like companies are getting bought out, but I'm like, I'm the one who got hurt. They didn't get hurt. I got hurt. But don't worry, by the time you need that money, it'll be back. And it was back. But think about if I hadn't to get back what I lost. Where would I be if I hadn't lost what I lost because of policies that I couldn't control? And that would be the thing I would say to my kids who are in their 20s. I'm like, listen, I'm not saying you should go and take all your money in your bank account and put it in Bitcoin, but maybe you should at least invest in the time to understand what it is and take something out of what you might have and say, is it worth it? If I was going to tell them to invest in a 401k, I would say maybe you should think about diversifying investing in that too. And with the understanding is you're not put the money into it that you don't need. Let it just sit there and don't plan. Just don't fuck with it. Just leave it there. And the same thing with people like, oh, you're retired. Maybe you should get a bigger house or a different house. I'm like, well, why? Why would I spend all that time and energy when I have a thing that's paid off? It's there. I know what it's worth. It's only going to increase in value because of the way our economy is. So why would I go and put myself back into that thing where I got to get another mortgage and all that stuff? No, I'm just going to sit on what I have because I want the value of that down the road. I'm 56. So in 30 years, if I'm still doing well, I want to be able to sell that thing and give it to my grandkids so they can have 529s or whatever for college or whatever. Like I have the value. Like now, if something catastrophic happened, I needed the money for cancer treatment, sure, then I would do that. But like to me, that's where I look at, like, when I listen, I try to listen and I try to equate it to like what I know from like dying systems. And try to apply it to what I would say to younger people. Not that I'm a financial, and I know you guys aren't financial advisors, and I appreciate that you don't try to say, well, tomorrow you should go buy this. Like you are trying to get them to understand. And I think this episode was really fun for me because like it almost was a reset. And now I'm almost like going to class. I've been listening, and today was almost like going back to the first day of school and listening to the lecture again. And it made so much more sense to me than it did like 2 months ago or whenever we started. And the funny thing your guest that you had on Ras, the poker player,
yeah.
It's funny, like you said something and it made me think about the fact that is like when he talked about what he owns, like he doesn't touch it either. Like he doesn't go and spend it. No, when he wants to make money, guess what he does? He goes and plays poker again because he knows he's good at that. He has a skill. He makes money using the skills that he has, but that money that he's put aside in the Bitcoin, right? Like it's like he's not buying pizza with it. Like he's not like trading it. He's not using a 4-year cycle from what I understand. Like it sounds like he's like, no, this is my generational wealth that I want to build for my family. Right?
Yeah.
And I think that's the way I would be looking at this if I was much younger. This is where I would educate myself. And again, I don't know. I didn't know anything about this before I met you guys. Besides, what I see on crappy news, cable news. So I think today I wanted to compliment you because I think today was a really cool episode because it was almost like going to school for the first time. Like to me. Sorry if I went off on a tangent,
no, it's good. But you reminded me of a quick story I want to share too. I know I was about to end it, but this is important. So I talked about, and you said, neither of us are financial advisors. I'm working on that path. But I sat in a meeting this week, right? Sat in a meeting and for the financial company that I'm working with, we had a guy who was presenting, and he's been with the company since 92 or 94. It was right either before or after what I had brought up. And he was talking about how traditionally in finance, you wanted that 4%. It was the 4% rule, where you were trying to get to a place at retirement where you could draw 4% of your retirement assets to live off of for the next X amount of years. And we kind of realized since then that the actual number that you need is actually 2.83% now. The 4% number is no longer good. It's actually 2.83 after they've done all these studies. So I raised my hand. I'm like, I know I'm new here. This is kind of my thing. I said, I ran a simulation in September, and I said, you're talking about how financial advisors have been talking about this 4% number, and it kind of like hasn't really been it. I said, if you sat down, it was either year before or year after you started working, talking to him, and I said, and you sat down with your financial advisor in 93, your financial advisor were like, we're gonna incorporate a plan for you that's gonna get you to be a millionaire in 30 years when you're done working in 2023. And how are you gonna feel about being a millionaire? Oh yeah, it's gonna be great. Be a millionaire. Oh man, can't wait. I'm gonna work all this time, put this money away, be a millionaire, right? And I said, and then that guy that was sitting there with his financial advisor in 1993 retires in 2023. Looks at his retirement portfolio that's now $1 million, but now realizes that $1 million he actually needed in 1993 was actually $2.3 million that he needed, because that's the buying power that $1 million had in 93, and that's where he's at today. So he lost, what would that be, 67% of his buying power, doing everything the right way, financial advisor telling him, and incorporating a plan. And I said, it's not the financial advisor's fault. I said, I'm not saying this to blame the financial advisor. He's doing his job, right? With the information that he has at the time. I said, but we have this like window of data now to know that if you're not incorporating all this unexpected, and like, where's this go from 2023 to 2063 now, right? The guy from 93 to 23, look at how much he fell off. Where are we going now? Now that the money printer is like on full blast, what is the guy in 23 sitting down as a 30-year-old looking at 2063? What does he need? 5 million? I said, if he needs 5 million, right? Let's say he needs 4 or 5 million. Does he have 2,000 or 3,000 a month to put away to get to that number? Hell no. Where's it coming from? What is he doing to get there, right? And I completely stopped short of the whole Bitcoin thing because that's not the room for that. But in my mind, I'm thinking to myself, if you want to get to that number, the only way to get there for somebody like me or you that doesn't make $1 million a year is Bitcoin. Because Bitcoin's going in the opposite direction, right?
Yeah,
Bitcoin
you can't get there unless, like you said, I don't know how you do it unless you're going to go work for state. You're going to go for the state government and get a state pension.
The guy that got to $1 million would never have gotten a 1.3, or I'm sorry, 2.3.
Yeah, right.
He never gets to 2.3.
He can get to $1 million, but getting to
he got to $1 million because
right.
Think about the salary he was making in '93.
Right.
Where's it coming from?
Right.
He never had a chance. He did everything right. He never had a chance. So now this guy here in 23 sitting down with his financial advisor, now he's telling him 2.83, which is at least better information than the 4. But like, what chance do you have? Like, somebody like me, my generation, when getting to $1 million is like, oh, I'm a millionaire. It's like, what is that going to do for you? Like, let's say you get to $1 million and you have 50,000 a year for 20 years. Like, what's 50,000 a year going to be in 20 years from now? 50,000 a year right now is.
Yeah, you're pushing it.
So if you want to get to $1 million, and to save $1 million, dude, even with compounding, like, you got to put away some money. And people are barely making, like, they don't have $200 or $300 to put away.
Paycheck to paycheck, yeah.
Like, they don't have $200 or $300 to put away. And what's $200 or $300 going to do? You got to start putting like 7, 8, 9, 1,000 away if you got to get to that. And then that's the inflation. That's what it's doing. That's what the system is doing to people. And you don't see it because it was very like subtle for like 2 decades, very subtle. But 2008 and COVID has totally hit the gas. And if you're not paying attention, then you don't. If you don't know anything about Bitcoin and you don't learn, you're sitting there like, what do I do? Like, what's the answer? And it's like, if not Bitcoin, there isn't it. If Bitcoin isn't the answer, there isn't one. So it's either you start learning about this, and when you fall down that rabbit hole of like getting orange pilled, and you're like, yeah, dude, this is it. It's going to take a little time, but same thing for the guy in 90. Think about the guy in 93. He grinded, put his head down and grinded, right? Why can't you do that with Bitcoin? Put your head down, grind, stack sats, let it do its thing. The guy in 93 let it do its thing, and he got disappointed, right? I've been in this thing since 2013. I'm anything but disappointed. It's completely changed everything for me, right? I was able to make complete midlife changes because of the money that I was able to acquire from being in Bitcoin that I wasn't getting from my social work salaries.
Yeah.
Without ever touching, I didn't even touch the Bitcoin that I have. Without touching a sat.
Yeah.